Aditya Birla Group presents Budget 2015, the Make in India Budget, co-presented by SBI.
Hello and welcome to this special budget edition of Taking Stock. I'm LATHA, VENKATESH, and with me is this entire team of CNBC TV 18 Research to take you through the details of how sectors and stocks reacted to the myriad announcements in the budget. Let me start with the captain of the team, ANUJ. Well, what have you made of the reaction of the market itself? Because it was all over the place. A 700-point movement from the high to the low for the Sensex and about 160 points for the Nifty.
A couple of points. First is take a look at the cash market volumes. They were lower than yesterday. And within that, FI volume was only 6% versus, or 6 or 7% versus average of 50%. The FI has net bought about 600 crores, but the gross volumes were 1400 crore on the buy side, 800 crore on the sell side. You can make nothing out of that. The key market trend would be visible on Monday. On Monday we'll know whether the FIs have given it a thumbs up or a thumbs down. But from whatever we have seen today, I think two things stand out. One is that maybe the private sector banks are ready to take back the leadership. That's something that stood out. Second is, of course, what happened to ITC. That's something that, of course, Pragya will also talk about. But that stock dragged the market. ITC dragged the market by 53 points, and still the Nifty ended 57 points in the green. That was also telling you about a bit of inherent strength of the market for last couple of days.
Can you call the direction of the market? Has it priced in all the positives and the negatives?
I think safe to say if Monday morning the Nifty does not breach 8750, in that case the market would have again established a higher top, higher bottom formation. And in that case, the market would be ready to go back to all-time highs. This is if the Nifty is able to sustain 8750, because that was the low of the last series, and that is one level which the Nifty had defended. So that's one level that I'm watching out for. If that is defended, the market is ready to move higher. But as I said, the jury is still out because the FI volumes would come back on Monday. A lot could change on Monday. The day after, normally on budget days, is always the day to focus on. So let's see what happens on Monday. If 8750 is successfully defended and the Bank Nifty continues to do well, this market is headed back to all-time highs. But otherwise, I mean, if it breaks 8750, then there could be problems, maybe Nifty going back to 85.
So I completely take your point, because the entire fine print, the memorandums that come with the budget were not known even up and as the market closed. And then there are a lot of clauses that are subject to interpretation and explanation. So it'll be a busy Sunday for research desks all across brokerages to pour through the details of the budget and then fashion their reaction. But nevertheless, there were some initial reactions first. And Varinder, to you, what exactly did you pick up from the brokerages in terms of the overall reaction to the budget?
Well, this budget was entirely for Texas, and, there are some key positives which has come out of Texas. The first one, of course, is that there was no tinkering on that long-term capital gain, which was feared in the market that something might happen on that. So that is one. The second, of course, in the clarity on GAR, which you mentioned, and there will be no MAT on FPIs, which was again a fear which was happening in. Good that, the FM mentioned, so that is now out of the way. That is important. Of course, the FDI was allowed in the alternative investment funds with a tax pass-through for category 1 and 2 FIs, which again is a good thing. FDI and FI, limits were merged. Nimesh will, of course, talk about that. Clearly, great sign for Axis Bank. That stock was up nearly 8%. And also important was that 3.9% physical target, which came in against what people were, or the economists were expecting 3.6, which most of the economists on the street, we were talking to, they say that it's a good thing because there will be higher spending on infra, and that is a good thing. GST again, a reiteration that April 1, 2016 remains the deadline, and that will be met is important. A small negative, if you want to say, is the corporate tax. Post surcharge, it goes to 34.5% against what the interpretation was earlier that it was reduced. So that is one thing, and of course, below high expectations, whether it was PSBs, SEZs or gold companies, which didn't come through, and we clearly saw profit booking happening in there.
All right. We will still have to wait how the market looks at the macros. Before the budget, the markets thought that there is so much money because of oil, crude prices falling, that the budget can both meet the fiscal deficit target and find a little money for divestment, for investment, pump priming. But what we now discover is that the Finance Commission has taken away so much money that neither has the fiscal deficit target been met, nor has really there been much in terms of investment, because the plan expenses itself are down by 1 lakh crore compared to the budgeted estimates of last year, and the total capex has risen by 35,000 crores. I mean, how much of pump priming can you do in 35,000 crores? So we really still will have to see whether investment got a boost, but the market markets definitely got a boost. If both Anuj and Varinder have been talking about that 50-point cut which ITC brought, there was a 50-point gain which the private sector banks bought. And Nimesh is here to tell us how that happened.
Indeed, Latha. Most of the private sector banks were buzzing into today's trade. In fact, the biggest gainer was Axis Bank. What made this big move on the private sector bank stocks was in the budget that they've clarified that the FDI and FI limits will be converged into one. So that means that the FDI and FI limit will be considered as one in most of the private, and that's more beneficial for private sector bank stock. Why Axis Bank? Axis Bank, in Axis Bank, the combined limit of FI and FDI is currently at 52%. Now they can go up to 74%. FIs can go up to 74%. There is a 22% window which FIs can buy. But in Axis Bank, the board approval for an FI limit is 62%. So still, right now from the budget announcement, FIs can buy up to 10% in Axis Bank, in days to come. So that will be the big stock to watch out for. Apart from that, the other big trigger for Axis Bank is Axis Bank was removed from the MSCI last year. Now there is a big chance that MSCI will include Axis Bank back into the MSCI index. So that will be a big trigger for Axis Bank. Apart from that, the top 4-5 gainers were IndusInd Bank. Again, they benefit hugely. There is Yes Bank, which benefits from this move, and also Federal Bank. That's a small stock, but even that will benefit from this whole move. Okay. So clearly, the combination of FI and FDI combining together will make sure that Axis Bank becomes the darling of the last, at least in the near term.
Absolutely. But for 50 points that these 3-4 banks brought in, 53 points were taken away by ITC alone. So on that, more from Pragya.
Well, it was not the best budget for the cigarette companies. The news, of course, that was announced in the budget was the excise duty hike on cigarettes, which are sub 65 mm. This is the smaller cigarette category, is about 25%. For all the cigarettes category, which is roughly, the large amount which is smoked by smokers, that stands at about 15%. For a company like ITC, with its kind of volume portfolio, that has 10% of its volumes coming in from the sub 65 mm and the rest of it from the larger segment, for them, the blended excise duty hike stands at 16 to 17%. Remember, for ITC, this will be the 4th consecutive year that the company will have to battle with a high double-digit kind of an excise duty hike. Of course, this is much higher than the 8 to 10% the expectation that the market had. Now, a little bit of analysis that's come in on the first cuts from the analysts says that for FY16, they're anyway assuming a 5% kind of a volume decline. The company will have to at least take a 10 to 12% price hike to entirely offset this excise duty hike. Typically, ITC's strategy has been to maintain a sort of a 15 to 16% EBIT growth in its cigarette segment. Assuming they go with that strategy, then they will have to take an 18% price hike to entirely offset this increase, which will be very difficult in the current scenario, because in Q3 we've already seen
EPS get affected.
Almost to the tune of 5% would be the impact on them, and that would be a deterrent for the stock, given that 80% of your profits come in from this segment. So, expect some downgrades on Monday.
On that point, we'll take a smoke break and we'll come back with more analysis from our research team.